What to do if you cannot pay HMRC on time. So, are you a UK business owner that is struggling to pay VAT, corporation tax, PAYE, or a combination of all three? Listen, even successful businesses from time to time struggle to pay their tax bills when they're meant to. You are not alone. Remember, my name's Chris Word and I am from Director First. I've got some notes for the show. In this video, I'm going to explain to you about various HMRC debts. I'm going to explain to you how HMRC try and collect those debts. I'm going to explain to you what happens if you don't pay those debts that they're trying to collect. But most importantly, I want to explain to you what you can do about it. Let me just have a sip of my cup of tea. So, any kind of arrears to HMRC are fairly serious. Like, they should be dealt with as soon as possible to prevent the situation becoming worse and the HMRC issuing something called a statutory demand followed by a winding up petition. I'm going to come on to those a little bit further into today's video. But I'm going to talk to you about different types of tax first of all. First of all, you have corporation tax. Corporation tax is paid once a year. Your business puts your accounts into the accountant does the accounts, and if there is profits, you are billed corporation tax that needs to be paid. Another thing is called pay as you earn. If you have staff on a monthly who are on salaries, on a monthly basis, you'll be given a bill from the accountant to pay that's called the pay as you earn bill. You know, you're supposed to pay it every month. There's also something called VAT, value added tax, which you, if you're VAT registered, you go out and collect that VAT, and your job is to hold it. You're a debt collector for the revenue, and you pay it once every 3 months. Now, what do HMRC do to try and recover the various taxes if you've not paid? Well, you'll be first sent a nice letter. You might get sent a few letters, and if you don't respond to letters, you're going to get phone calls. And if you don't respond to letters and you don't respond to phone calls, eventually you're going to have enforcement agents at your door. Now, that could be at your business address, but if your business address is your home address, that's where they're going to be tipping up. And it's important that you understand a few things about these enforcement agents. Because you've got sort of bailiffs, HMRC bailiffs or HMRC enforcement officers. Now, an enforcement officer, they might actually be authorised to enter into your premises to start taking things away, to sell at auction, so they get some money for the tax arrears that you owe them. Ignoring them or delaying action on these letters and these phone calls can result in enforcement agents being at your door. Now, the HMRC actually hires bailiffs. They hire companies to enforce tax debts. Their sort of rights of entry are fairly limited, but there's a distinction between a bailiff and a HMRC enforcement officer. HMRC enforcement officers generally handle debts over £5,000, while the bailiffs manage smaller debts. Now, if you don't pay the debts on time and you get these enforcement agents at your door, this is where they can start seizing goods, and that becomes a real problem, and it's under something called a controlled goods agreement. Now, when an HMRC enforcement officer visits your business premises, they carry identity cards so you can check who they are. They will have the authority to come in most cases. Now, what they're looking to do is levy on goods in your business. So let's say, I don't know, you owe 50 grand in VAT and corporation tax. They'll come into your business, and if they come into our business here today, they could levy on things like the coffee machine there, the printer there, the computers here, the tables and chairs. Now, these things aren't worth anywhere near 50 grand. But if I don't pay my HMRC bill, 30 days from the day they come and levy it, they're coming back in and they're going to take it all away. Now, could you imagine if I had some cars, plant, expensive machinery. They can physically come in and take it. They'll take the stuff to auction, and the chances are at the auction they'll get next to nothing for it, and you'll still owe HMRC money. So it's really, really, really important that you deal with this before it gets to that action. And I'm going to come to that in a little bit later on in the video. They might also send you something called a stat demand. So if you can understand the statutory demand from HMRC, it's basically a formal demand for payment, right? And they issue it when attempts to recover money from you have just failed. Now, really, what it does, it lands on your desk, a stat demand, and you can either say you do owe the money, you don't owe the money, or you owe some of the money. But it's usually 21 days later from that stat demand, a winding up petition is going to come to you. So it's sort of like, it should really grab your attention, a statutory demand. It's not something to continue to ignore. Because again, if you ignore it, the next thing that's going to be coming up is a winding up petition. And what a winding up petition is, it's the very end of the train line. I'm going to just talk about HMRC. The HMRC will have sent letters, phone calls, agents for a period of months and months and months. They've not got anywhere, and they'll eventually go, I'm not getting anywhere with this guy or girl, and I'm going to petition to wind the business up in the courts. And what happens is, they apply to the courts for the winding up petition. The winding up petition gets delivered to you at your business address. Now at that stage, still nobody knows about it. They're just saying to you, listen, there's a winding up petition against you. It's going to be advertised in a few weeks. When it gets advertised, your business bank account gets frozen. It will get advertised, so a lot of your suppliers will see it and stop paying you. About 4 weeks after that, you'll get your day in court. If you don't pay your winding up, the debt that's owed on the winding up petition, the business gets forcibly wound up. You cease to exist, you're compulsory liquidated. Now you want to avoid all of these scenarios. So what is the solution if you've got HMRC arrears? There's a thing called a time to pay arrangement, and it's exactly that. It allows you to negotiate an extended time to pay the outstanding tax arrears that you have. This can be corporation tax, it can be VAT, it can be PAYE, it can be a whole manner of all three and others. And what happens is the HMRC will allow you to pay that over a period of time as long as you meet certain requirements. Now, it's like a lifeline, if you will, from HMRC, and it allows you to repay those debts gradually. Now, the typical period of time is 12 months, but you can, in certain circumstances, you might get 18 months, you might get 24 months, you might get 36 months. My advice to you here, a friend of mine used to say, shy kids get no sweets. What's the worst that they can ask? The longer you get to pay this, the more it improves the cash flow, the better chance you've got of surviving. But there is some eligibility. So the HMRC won't say yes to everyone. They're going to evaluate each request for a time to pay. And the main thing they're looking at is the company's past tax compliance. Now, if you're a company who's had countless time to pay arrangements and it's just another broken promise, the likelihood is they're going to say no. But if this is the first time you've had any issues, or you've had time to pay arrangements in the past and you've paid them, the likelihood is they want to support you again. Because you've got to remember, right, this tax that you owe, it's not you personally that owes the tax, it's the limited company. And if they don't support you, the chances are you're going to end up in liquidation. And in liquidation, those debts will get written off and they'll get very little, if not nothing, back. So remember, you're in a bit of a position of power. You can't take the Michael, but don't be frightened of it. I mean, you can engage with HMRC directly. That's why I do these videos, to try and help you sort of take the bull by the horns. But if your tax debts are significant, I'd advise you to take some advice. Give me a call, we'll talk about what the situation is, what the various options are, and I'll give you some more guidance on the specifics of your situation in organising your time to pay arrangements. Now, what you've got to remember is a time to pay arrangement doesn't diminish the tax liability. So it's not like you might owe 100 grand and think you're going to get a deal done at 80. It doesn't work like that. You're going to have to pay the full amount back and the interest, okay? But you're going to get to pay it over a longer period of time. Now, the sort of essentials when principles you've got to work with when you're organising these arrangements with the revenue is going in with a realistic repayment proposal. You know, notify them if there's any changes. Maybe you want to show them some cash flows to show how you're able to make those repayments if they just give you a bit more breathing space. And while you're in a time to pay arrangement, this is dead important. You've got to keep up to date with all your current liabilities. Because let's say you're on a time to pay arrangement and then you fail to pay your next VAT quarter, bang, that time to pay arrangement is in default. And if that happens, the process of debt collection starts again. Eventually they're going to wind the business up, okay? Normally the revenue's decision-making process, they're going to consider the level of risk, you know? It's like, can you, in all seriousness, get out of this? If they don't think you can, they're going to say, no, you've got to speak to somebody like me as soon as possible. Again, just to reiterate, consequences of defaulting on these time to pay arrangements are quite serious. If you don't keep up to the payments that you say you're going to, it's going to default. They're going to go through the debt collection process, they're going to start to wind your business up. And once you've defaulted on something you've said you're going to keep up to, they're not going to do another one with you. It really is one of the last things that you can use to keep your business going without going into some type of insolvency scenario, okay? Now, alternative solutions to a time to pay arrangement might be, if things are critical, and you're just not going to get through this. A lot of directors ring me and they go, Chris, I don't want to close my business. I understand that, okay? But their tax burden is so high, even over 3 years, they're not going to be able to get through it. Sadly, they're going to have to look at something a little bit more formal. Now that could be a CVA. A company voluntary arrangement is where you put all your unsecured tax debts and all other unsecured debts in one pot, and you agree to pay it over 5 years. You make one payment every month to the liquidator collects the money in and distributes that money out. Now, to get one of these approved, you need 75% of your creditors to vote in favour. Now, for argument's sake, let's say you owe 100 grand and you owe 50 grand to the revenue, you owe 30 grand to a supplier, and you owe 20 grand to the bank. Every pound you owe them, if you will, is like a vote. So you've got to get 75% of the voting creditors to approve it. Now the problem with HMRC, if you've got a history of not paying time to pay arrangements, they won't support it. By their very nature, the HMRC are sceptical. They're very sceptical of people who continually don't pay the tax debts. Now, if a CVA is not for you and a time to pay arrangement is not going to get approved, you're looking at some type of insolvency process, and that could be an administration or a liquidation. If you've had enough and you don't want to continue, a liquidation is the formal end of the company, and you appoint a liquidator and the liquidator formally closes the business down. They realise any assets of the business, they might sell plant, machinery, vehicles, collect debts in, and they repay it out to creditors, okay? But a lot of directors, they might go, you know what, if I didn't have this tax debt, and they've learned some lessons, this is important, you've learned some lessons, you've made some efficiencies, you've cut some costs, what you could look at doing is doing a pre-pack. And that's where you set up a new company or another company that you're involved with, and that agrees to buy the assets of the insolvent company. And that could be anything from branding, website, phone number, plant, machinery, money owed in, intellectual property. There's a whole host of things that you can legally buy. You transfer all the assets into the new company, start trading in the new company, and then liquidate the shell that's left. Now there's some things to be careful of if you do that. You must get a professional agent involved. If you want some advice around pre-packs, get in touch with us today. It's not something you want to rush into lightly. And I think the key thing is when you've got HMRC areas, it can be really scary. It's a call you don't want to make, but I promise you, they're nicer to deal with than you think. But if you want some guidance, call us, direct to first. My name's Chris Worden. I hope you've enjoyed the video. God bless and thanks for your time.